Okay, so wait for it to load. Awesome. So everyone, I'll start off by explaining basically. So for those of you that don't know or might be new viewing this, essentially it's a series I've launched where basically I'll choose an asset or a stock or something to analyze, and I'll do it live. The goal is we're not going to have this is all going to be unscripted. I mean, I've done a bit of a reading beforehand, but this is all unscripted. The goal is to kind of create like it's kind of like a fun exercise where I'll do analysis on something live. If you have questions, you can drop them in the chat. But everything will be unscripted, and we're gonna look at things. We're gonna use Google. We're basically using gonna use Google. We're gonna use some code that I've written to basically do a bit of analysis. And it's gonna be a cool exercise. We're gonna look at this week. We're gonna look at oil and gas. If you have any questions or comments, or you're curious, don't feel free to drop a chat or drop a comment below, or drop something in the chat. Also, if there's something you want to see analyzed in a future live stream, you can always reach out through the chat or through a comment. And before I begin, don't forget to like and subscribe. Subscribe to the channel. We have the Commodity Bro podcast every week. We have a podcast where we discuss everything from energy, critical minerals, looking at geopolitical context, policy, trade. Uh, and yeah, so let's dive in. This week, like I said, we're going to talk about oil and gas sector. Um, so let's dive in. I have Google set up there, but let me pull like a bit of an interactive. Alrighty. Hopefully this doesn't break. Last time, those of you who don't know, I built, weren't here last time. I built basically like a bit of an interactive analysis dashboard. I fixed it up a bit. It was a bit, and I actually added a bit more of a functionality. It's kind of cool actually. Um, but yeah, there were last time it was very buggy. I've kind of trimmed it down. We're gonna just talk about some of the top technicals. Maybe we'll even look at some of the recent developments in the oil and gas sector. I'll say we're going to focus. I say oil and gas. The focus will be crude oil. I think that's something interesting. A lot of people, like I was having a conversation. A lot of people tend to forget that crude oil is one of the most essential products within the energy sector. I know that like there's a lot of people that might be bearish on crude oil. I mean, I understand the logic behind what their arguments are, but I mean, I think people underestimate. I mean, the sheer size of the market. I think it's like twice the size of crude oil. Is like twice the size of almost twice the size of the top 10 metal like markets for the metal market cap for metals. Um, like if you take the top 10 metals and critical minerals in terms of market cap, crude oil is twice the size, and it's understandable. Crude oil is essentially the father of a lot of the energy, basically all the energy products. Without getting too technical, essentially like um, when they take crude when they frack crude oil out of the ground, it's refined into these different products. That's plastics, asphalt, concrete, you name it. It's all comes from crude oil, which is again why the sheer market size. And I'm not trying to. The point of this is not to try and sell you on crude oil. It's kind of shows just the sheer market size. But it's something cool to look at. Think about just when people next time someone says crude oil is dead, kind of that's something cool to look at. So I'll just throw it out there. Let's remove some of these lines. I know I built it, and yeah, so this is back to 2024, August 2024, 21, a year ago today. That's a year to date. Let's go back 5 years to date. Oh, January 1st. And I do this because I just want to kind of see like, so this is kind of cool. So I will say, first of all, talk about this. Like, I don't know, like just looking at this right now, for example, let's zoom in. I know this kind of looks funny. I just want to kind of give some historical context. I always love talking about this point. I remember everyone remembers over COVID. Um, this is, and we'll get into this. Maybe we'll look at the EIA actually. That might be an interesting thing to look at. I know they have a volume predictions or volume forecasts, but volume plays. It's really the importing the exporting dynamics, but also like the volume indicators are major indicator for understanding what direction the market's going to go. And like when you look at something like an anomaly like back in 2020, when we saw the market just literally negative price. And what's crazy about that is people look at that like, whoa, negative price. But that's what's funny about that is it was almost, I think even here, let's go down to like yeah, like here, like you can see like this is April 2020. Oh yeah, March, April. Yeah. So you see, it's even with looking at the RSI, it's something funny what's happening. We'll get to the RSI in a moment, but um, basically over COVID, no one knew what to. There was so much. There was not enough demand. Basically, supply outpaced demand, which is kind of funny. We're always talking about how OPEC is increasing supply. Like for more recently, OPEC increased supply to keep up with demand, and now back we're looking back when we thought this big crisis, people were literally giving this stuff away. And again, it's because that's how much that just to show you this. I show that point that out just to show the sheer enormity of how much just the scale of how much volume plays into the volume like demand and storage play into influencing the price. But just zooming out for a second, let's go back to a year today and let's look at. I just wanted to zoom out to show you that, but I thought that was kind of funny. I always like showing that. I talk about bringing that point up. Let's go back to just 2025, January 1st. Let's no, let's go line. No, sorry. And let's add a simple moving average. The 20-day simple moving average. Look at kind of go to 20-day and we'll go to 50-day. This is super interesting to look at just because basically the moving average is essentially taking 20 days, 20-day moving average. And so at a certain point in time, you take the average over the 20-day period, and then you move it over one period, and then you move it over one. And that's essentially what a moving average is. 20 days, we're saying more short term. When the moving average, when like like here, I think that when the moving average is above it, you typically need so this is kind of a short-term indication that maybe it's a bit like this will be kind of, you could look at this and say it's more of a buying opportunity, I guess. But so when the moving average is above, it's an indication to buy. Let's go to 50. And again, yeah, even long term, 50 days, I'd say like 50-day moving average is more like a long term. One thing I'll say is it's not like crude oil is not like an equity. I mean, a lot of people make that mistake. A lot of people think like crude oil, you treat it like, oh, long term, 10 years, 20 years. No, like, typically, like I heard this from a trader once. He was saying the long in commodity markets typically, like it's usually like 3-4 months is a long period of time. 6 months is extremely long. Commodity markets are so weird because they're affected, like especially like metals and energy. They're affected so much by supply chain dynamics. I mean, agricultural, I won't even touch that. That's a whole other ballgame. But just like we saw how much oil spiked when the Houthis were firing at the American ships in the Strait of Hormuz. Like that should be like this like it's just like you can see these isolated geopolitical events that will basically spike or cause a spike or a drop in the price of oil, and that's why. And I mean, even going back, you saw these spikes, saw a spike back there, like that's indication. Now, kind of let's go to RSI indicator, like just kind of overview quickly, like if it's say 70-30. So if it's below 30, it means if it's approaching 30, it means it would be more approaching oversold territory. If it's oversold, then it means it's a buying opportunity. Notice how again it's approaching the oversold, but we're above. So long term and short term, it was showing before that. Yeah, it's an indication to buy, and I mean looking to here like again overbought. And again, I guess these are more momentum oscillators. Typically, I guess you can kind of think of them. I kind of think of momentum oscillators as kind of like lagging. I mean, no one knows. No one has a crystal ball. If someone knew the future, they'd be wealthy. but like if someone knew where the price of oil was going to go, it's unpredictable. And that's what's so interesting about I find it so interesting about the energy markets is that everything's it's if you think if you think the stock market's unpredictable, try predicting geopolitical events, or try predicting like black swan events, like a war or something crazy, or like I don't know, something that would affect the shipping routes. So, I mean that's a whole other, and again that we can talk for a while on that, but yeah. So back to the RS relative strength indicator. Um, Again, so if a lot of people are buying it, you kind of see like it kind of follows a similar trend. Or sorry, it is a trend. Um, so essentially you're trying to gauge whether it's bought or sold. So with the risk of repeating, I lost my train of thought. So yeah, and then if it's approaching, as it approaches, you kind of like the sweet spot is you want to be, you kind of want to be stable. Like back here we were pretty neutral. Here it was approaching overbought. Again here when it was up there, like when it spiked when it spiked after the spiked around the geopolitical events. I remember something had happened a couple months ago. Sorry, but going back a couple months ago, that was like the Red Sea incident. Those were like the Red Sea incidents. I don't know, for those of you watching, though, if you follow what's happening in the war in the Middle East, um, you'd be surprised too. I remember like looking at the Baltic Dry Index and looking how like people don't think about this. People kind of don't think about the effect that the war in Ukraine, the war with Russia and Ukraine has on the price of oil. But you know that like just the sanctions alone, and that's just kind of drifting away from crude oil into natural gas territory. But just the fact that just the Black Sea, for example, or not the Black Sea, sorry, the I forgot the name of, what's that sea next to Ukraine and Russia? Um, what's the name of that sea? Go to Google Maps. Uh, See that sea next to Ukraine and Russia. Those of you who are probably watching this now, you know where I am in Ottawa. Yeah, yeah, it is the Black. Sorry, it was the Black Sea. I was right. I was thinking of the Caspian Sea in my mind. That's when I thought I said that. Yeah, Black Sea. So basically when there was the whole war, when the whole war in Ukraine and Russia, I'll just leave it there. Essentially, when you had the whole when the war broke out, essentially it affected a lot of the shipping routes coming out of the Black Sea. And the Black Sea, like the port, like there's like the strait right here where this thing right here, the major shipping route. This is how the Russians, sorry, the Ukrainians have ship a lot of their ship a lot have a lot of shipments. I mean, talking Ukraine, I think at the stat I saw I think it's like 50% of European grain production came from Ukraine, which is a whole other. I'm not going to touch agriculture, but that kind of shows this was a Black Sea had a lot of shipping. So it was a big shipping hub prior to the war, and I guess it's been affected. And there's a lot of, and then again the energy that's passing through there. But more than that, but more than that, I think like like, or I know that like Europeans would buy pretty much all their natural gas from the Russians, and now I believe like the what's affected kind of the natural gas market now is like, I'll show you the Power of Siberia like pipeline, Siberia map. But essentially this is a good map here. Essentially the Chinese the Chinese and the Russians have essentially built this pipeline here. Let's go to find a better map. Google Images. Here, let's just go to the site and click on the website. Click on the image. Here you go. So basically, you got the power site. So essentially, like, I just throw the map up without getting too technical. But basically, this was a project that had been going on for a couple of years. But basically, the sanctions on Russia by the EU essentially pushed Russia. I guess kind of gave them no other option. And I won't get overly political. That's not the point. But I'll get back to why this affects the price of oil, because you know that, like, for example, even Canada with the LNG shipments, find LNG deals to ship LNG with with the Japanese and South Koreans. So we're seeing a lot of these dynamics shift now, and so when you think about the output, um, and where that I know that the EU has a lot more has been trying to incentivize more a shift towards green energy. So that kind of leaves, like, I guess, oil producing countries like the or energy natural like non-renewable producing or I guess fossil fuel producing countries like Canada and the U.S. Um, Again, they're doing deal. They're either doing a lot more. They're shipping a lot more either to Europe, but I mean that's across the ocean. I mean I know that Canada's LNG shipments, for example, it would be the U.S. I think it would be the most practical for the if the Europeans were to ship oil or natural gas. Canada's LNG has three terminals. One's online in Kitimat. Two of them are to two more to come online in 27, 28. I think on the names of them. But essentially, those are gonna those are on the west coast. So that's I guess it makes sense why they're doing business with the Japanese and the South Koreans. Um, Again, that was kind of a sidetrack, but uh, yeah, but that's like it's trying to understand it, trying to give you a kind of an idea of why understand where it's going to go. Let's go to EIA. Out. Let's look at where is it? Let me open a new tab. No, let's open a new tab. Oh shoot, I'll just close that. EIA, not now. Let's go to sources. Let's go to where would it be? Short term EIA storage outlook. EIA storage. Natural gas storage report. No, there should be a crude oil one. Or sorry, should be a production. Sorry, should be a production one. Where is it? It should be data tables. Energy prices. Inventories. Here we go. I believe this might be. Okay. Can we zoom in on this? So this is a good piece of. I was hoping they'd have a chart, but this will work. But seeing total world total crude oil and other liquids I assume they're referring to natural gas or other energy products. Um, and this is in million barrels per day. So consumption and inventories. So in terms of production, let's look at production. We can see, I guess it's increased. It has increased like over the year. It's interesting. Let's looking at. It's kind of fluctuated in 2024. That makes sense. Production it kind of in quarter 3 dropped slightly by a million barrels per day. And then there should be a chart. I feel like this would be so much easier if there was a chart tables. Uh, let's see. I feel like okay, sources and uses natural gas, petroleum, and other liquids. No, here. Let me try to find AIA. Here we go. Okay, petroleum and other liquids. U.S. fuel production. I guess for the U.S., but I guess I'll use a U.S. kind of gauge because I guess we can look at the West Texas Intermediate. Sorry, West Texas Intermediate. I always have to say that word slowly, otherwise I mumble it. Let's do. Can we zoom in? I guess I'll download the Excel data. Oh, save. Okay, and let's scroll down to this annual. So let's only do 2000, 1998. When was the Gulf War? 1998. Okay. Sorry, I have to enable editing. Yeah, let's go back to 95. I feel like that's a good year to go back. Insert recommended charts. Line. Okay. It doesn't matter if the series looks fancy. It looks fancy enough for me, at least. No, Control Z. So I guess it spiked in 2020. The production. Why is that? 2008, 2020. Sorry, 2020 it dropped. Its production dropped, but it was rising steadily from 2019. Sorry, 2007 to 2019. We saw relatively unhindered. I guess in 2016 it dropped slightly, but again it rose. What's interesting too is I guess it rose under. This would have been the Obama administration, and then under Trump it shot up again. I guess it dropped around COVID. That was because I guess the shutting down, and then 2024 to I guess 2024, it looks. They did go to 20. Let's look at the data again. Yeah, it only goes to 2024. I guess let's see. There has to be 2025 production and supply. Here we go. Anyways, what I'm trying to do here is I'm trying to figure out. We were here before, I guess now. What I'm essentially trying to figure out is I'm trying to look at kind of come to a conclusion as to where I think where I think where I think oil will go. I'll be honest. I mean my hunch is based on the fact that we are seeing record highs. We are seeing. I guess it said there before record high, but again, if you look at just the trend, if you look at like we'll get to that in a moment. Okay, I guess we'll go to that in a moment. But I just want to explain. I'm looking at production because production is a good way to gauge. It's a good way to gauge the momentum. If a lot of the oil producers, again like OPEC for example, and that's actually again why I think that I think that oil is going to continue to climb. Is OPEC and I think now OPEC plus, which includes some of the BRICS countries, if they're beginning to if they're first of all they were before they raised the output target by like 500,000 barrels per day. I believe it was they in their when they I believe that was the figure. It was like 500,000 barrels per day. or over like 500 and something 20 something thousand barrels per day increase. Like, and I know Kazakhstan is a minor country in this, but Kazakhstan had been exceeding its targets, and OPEC didn't really reprimand them. They kind of just said, let's raise it all together. And again, this was because that's how they control the price. That's how they, if you've watched my Commodity Bro podcast, actually, I talk a bit about that. I'll say about, I guess I'll throw an AdSense in here. Like, if you want to watch, if you're interested, every week at noon, I have a Commodity Bro podcast. I'll throw that out there. But anyways, what I was saying, what I'm saying is, or what I was saying was OPEC increased production again, because demand. And again, I think that was partially because of the pressure from the U.S. Senator Trump had went there, did his tour of the GCC states, and they did speak a lot about. I know they spoke a lot about oil. Trump spoke about how they're working with they want to work with Qatar, they want to work with the UAE, and they want to work with Saudi Arabia to bring down the price of oil. And I think that was kind of. I mean, they had the meeting when they announced it. That was right before, but I think there was a lot of motivation came from the Trump administration to bring down, because again, that was OPEC is essentially the world power that, or the world organization that has the power to influence the price of oil the most heavily. Um, if they decide to stop producing all of a sudden, like it would shoot up overnight. I think, like even more so than we saw when the strike on Iran happened. I'm not going to get too political. I think that's the depth I'll go for that. But yeah, I think in general though, I think that you're gonna look. I mean, I'm trying to find that chart tables figures. Open tab. Let's see. Okay. Okay, so here we go. This is what I was talking about. You see how like there's kind of like a little dance, like when I guess where you want to be in a position where production is above consumption. That's good. Where right now, and again, if you go back to 2020, I guess early quarter one 2025, that was kind of, or end of 2024, that's kind of where we saw the ramp up of production, and that was just because they're trying to bring down. I mean, if people are asking, I'm not going to say this is the end all answer, but I'll say, like, everyone was talking about how the price of oil shot up. I mean, just look. I think a lot of this inflation on a lot of the inflation that we saw on gasoline prices, on diesel prices, on energy prices in general, I think came from um, COVID. We saw the drop in production, and I guess we also saw. I mean, we might have seen a drop of consumption. I think that was more or less. I think the drop in consumption was more because less people were driving, less people were using vehicles, or were consuming the energy. I guess if they were consuming energy, they were at home, and so you went through a period where world consumption was above world production, and that's essentially that's where demand is out. That's where sorry that's where demand is outpacing supply, which is you don't want to happen. That's bad for that's essentially bad. That's bad. That means the prices fly. Um, and then I guess looking at production of well, let's look at their forecast. Sorry, before I go to this, I'll just close off and say, like, they're forecasting too, like, that it's going to continue. I think that's forecast is more bullish, just because I don't think it's a far stretch, honestly. I think if OPEC continues to periodically increase its production, um, but I guess it's also like a double edged sword. I know that the Saudis, for example, have an incentive almost to keep the price of oil. I think it was over $80, or 70, between 70 $80 they need because of to cover for them to balance their budget. So while they want to listen to the Americans, they also got to listen to they also want, if they want to balance their budget. I mean, it would have to be, and I mean, you can't just say, oh, we'll wait for inflation to kick in, because some people have heard say, oh, if the overall, I mean, over time the prices will increase and it'll be balanced out. Not how it works. Inflation it'll just become more expensive. So I mean, that's a whole other discussion. I won't get into that. But here's just another, like, it's organized, I guess, non-OPEC versus OPEC, I guess, producing. That's not so interesting. I thought what was interesting, though, was, it might be interesting. No, let's go back. See if there's let's see if there's another interesting thing to look at. I'm just kind of going through. Sometimes it's kind of interesting to see. See this? No. Okay, I guess actually, well, now if we have a map, I might go back to that one actually. Regions, let's go here. So I mainly just said the other one no because I wanted to make sure there was a map, but let's kind of look. I guess this is kind of an interesting way to kind of compare where we think, or I mean, where look at the different regions. You go forward. I guess it makes sense. I guess south. I know that Texas. I see the oil, a lot of oil down there. I didn't honestly. I didn't think so. That's interesting. I wonder if there's a correlation. Anyways, Interville. It's interesting that. I mean, it makes sense. The biggest producers are would be down here. That's where the bigger producers would be. But anyways, with the risk of droning on, droning on, I guess I'll kind of close out the podcast. But but yeah, I guess I'll kind of close out the podcast. But I think that yeah. Anyways, I think that's it for today. So if you have any questions, if you enjoyed the stream, don't forget. I hope you enjoyed the stream. Don't forget to drop a like, or sorry, drop a comment, like, subscribe, and in future, and wait, stay tuned in for future episodes. Again, we have there's if you tune in every Monday at noon Eastern time, we're gonna have Commodity Bro podcast. Essentially, I'll take down a topic in commodity markets and talk about it. We cover energy. We'll talk about energy, critical minerals, geopolitical supply chains, all that fun stuff. And if you enjoy more content like this, don't forget to tune in next week at 7 p.m. We were running a few minutes behind technical difficulties, but I hope you enjoy.